Hello guys, glad to have you on board again today. Posted as usual, covering up the Bitcoin and Ethereum. Then I'm just forgetting entirely about all the other coins. For now, I just focus on those two. We're the strongest before heading into the crisis mode that we currently are right now. So just to set things straight, I'm not gonna hide myself from this. I've been pretty damn wrong recently, even though this was the initial scenario. So it's about time to just get back to this one, which is we're about to probably break down the 6,000s. This was absolutely expected. We are about to head toward the flushing pattern, which is the final stages, or at least the very late stages. There's still one step after this one, which is the desert crossing, the one we've been talking about yesterday. So basically I'm still right into the expected scenario. So those who have been playing the Ethereum rebounds and the altcoin scenario, trying to have some kind of recorrelations of the altcoins that would just pump before dumping as the Bitcoin has been doing, then that scenario is obviously out of context right now. We're really breaking down, we're making candle closes at the low. This is nothing close like we should keep on going for a long time. So we obviously made a candle yesterday that is not that bad, and suggesting that this, for some reasons I still think that we should somehow narrow the losses in the next following days. We're not going to keep on following the minus 4% a day forever. It's just that for some reasons, I think right now we might be ranging in a bit, ranging there, spending a few days, executing the latest bullish demand before getting into eventually breaking down that support. But just to set things straight, I don't think we have any chances to hold this one more time. We're going to get lower than that just simply for the flushing patterns demand, which is we need to get to the stop losses, and I think they are further away from the current prices, and that breaking down 6,000s might be necessary just to get to those stop losses and flush out all those who've been trading with leverage. I said leverage is not possible right now, especially not into late stages of a crashing pattern trading. So all those who've been trading recently without leverage, then if you want to do the buy and hold and think the prices you have are decent enough for your scenarios, then I agree for you now to do that buy and hold. But obviously you might be able to suffer from lower prices, and the fact that if the price is about to go to, for example, 2,000, you might not want to change your mind. It's just you need to have resilience right now. If buy and hold is definitely your scenario, then just get the damn Bitcoins into an hardware wallet and get your hell out of it. And you just don't look at the charts right now. That's the only solution. If you are ready and thinking that this is about time to get into buy and hold, and I will not disagree anymore. I don't think you're going to get the best prices if you are buying right now. But if you want to do it, I will not say this is not possible. I think the timing will be a lot more appropriate if you just wait for the flushing patterns to occur and do it right after, when you get to the desert crossing area, in which there we should have absolutely no volatility, and you basically probably, I think, will have the same prices as the one we're currently trading. So I would say it will be safer to just wait for the price to do this first and then buy again later. So this is what I think you should do. Then this is what you can do that matters, and I think right now it's possible. So you do whatever you want. It's none of my business. I'll tell you what I'll do, and as I said, I will hold on the trades I already have in place in Ethereum and Bitcoins, but I have a lot more money available to get into buying lower prices if they get to be available. My goal is just as yours is to get decent prices on the average return, and I want to have those prices below 6,000 in the Bitcoin and below let's say the current below those prices on Ethereum. I want to have an average return below 400 on the Ethereum and below 6,000 on the Bitcoin. As long as I have something below that price, I'll be pretty much happy with what I get. Of course, the lower the price will be, the better, but it's going to be hard to catch up the bottom and have the best price. Those who will try to do it might be suffering a lot of failures in between. So instead of just focusing yourself on getting the best price just to be pricing yourself, it's not really what you should focus yourself into. Just as we said yesterday, and I'm going to repeat on that, right now it doesn't really matters what price you'll get exactly. All it matters is that you are respecting a decent risk-reward ratio when you're trading, making sure not using leverage, and right now the scenario is suggesting that the ongoing trades might only be just a buy and hold and nothing close to speculation, leverage, or whatever. So if you're buying right now, you just do it without a stop loss and you get yourself ready to lose the money you put in there. Not entirely, but you get yourself ready to eventually have a Bitcoin at $1,000 and staying there and just dying through time. And that's a possibility you might be facing, so you just need to be ready to see this. And if you're not, then just don't do the buy and hold and just wait for the price to make the bottom and buy the desert scenario that might be the next step toward terminating the crashing pattern. All right, so this is basically all I have to say. I have no more than yesterday. We just let go. I think the prices are probably going to range the current price area between support and resistances. We've got taking profit pattern on Ethereum. We've got Bitcoin working around the support area. It's been making a decent candle yesterday, so it could very well invalidate that today or just range a couple more days or throughout the weekend. Eventually next week could just be trading the next same area. The thing is that I think somehow in the end of that ranging area worked out, we're probably going to have the bearish outburst. But this is what I think, this is what the technical suggests, not necessarily what the market will do, so just trade safe. And as I said, if you're ready to get into buy and hold right now, I could understand that right now. But you need to be aware that the Bitcoin could get to very, very low value, and you should not change your mind. So if you do get to that buy and hold, go put those Bitcoins into a Dame hardware wallet and just stop looking at the charts. Otherwise, it's not possible. All right, now moving on and trying to assess what's at play right now regarding the other assets. So the gold has been making a bullish breakout yesterday, but closed at the low end. Today, obviously, the bears are back at play. We're back into the previous trend channel, which means this is once again a damn fucking fake breakout. Good job, bears. You're incredibly strong recently. I don't know how the hell you can find that strength, but that's how it is. I mean, the dollar is just helping you so much, but at some point it's going to cost you a lot. Today we're going to talk USD MXN, we're going to talk USD CNH. I'm playing that damn scenario throughout CNH and MXN. So I've been buying MXN yesterday, it's doing pretty well today. Still waiting for CNH to take over the dollar, but at some point still not working well at the current time. EURJPY is just doing a fucking great job. Remember, these are the only two scenarios I have in leverage right now, AUDNZD and EURJPY. I have a tiny leverage on USD MXN. I'm leverage 1.5 or probably nearly closer than 2 to 1.5, but not necessarily at 2 at the current times. Anyway, that asset is going to be volatile, so I'm not going to go further than leverage 2 into USD MXN. So I'm already maximum leverage on USD MXN, still maximum leverage on AUDNZD, maximum leverage as well on EURJPY. So EURJPY is leverage 4, and I'm not going to go further than that. AUDNZD is leverage 7, and I'm not going to go further than that. GBP/USD has been stopped out today on a maximum loss, 4% lost on that damn scenario. This one is really, really pissing me off because I hate being stopped out near the bottoms. We're going to talk about this one right now, actually. The thing is that this thing is just collapsing. So we won't... I won't have to talk much about this one because this is pretty much simple. I think we have multiple options, but I'm favoring one of those options, one on top of others. Is the thing that I think we've been making a very nasty consolidation pattern, which is a wave A, very dynamic because of the damn dollar. A B wave dynamic, which means we've kept on going downward, but this was a consolidation. And the fact that what we're having right now, the second bearish impulse, leads me to believe that this is not yet over. We're gonna go lower, and that for some reasons I have to trigger the stop losses and just wait to have better risk-reward ratio to get back in, and eventually hope to take my money back in the end. Obviously, it will have to be done respecting the strategy. Doesn't mean I'll get there and put the damn fucking top leverage instantly just for the sake of getting my money back. It's not how I work. I will forever manage the risks first, which means I get there. I'll probably have to put a little bit more leverage than the usual speculative scenario, but that will remain speculative leverage on top of everything. I'm just going to get there, buy, securing as fast as possible to get the highest secured possible leverage in there before getting in further. Okay, so don't get me wrong in there. I'm not going to be crazy, tilting, kind of aggressive in there. I'm just going to be a little bit more aggressive because this is nothing close to a normal pricing when we are consolidating. Because as you can see, this is a bullish impulse. I know it doesn't look like it looks like a range, but it isn't because we're having overlaps. I mean, we're creating a resistance, being support. We're creating a resistance, being support. Resistance, support, when you have this, is nothing like a range. It looks like because we had a lot of pullbacks and it was going up, going down, going up, going down, going up, going down. But actually, we did create a bullish impulse in here and suggesting that we might have made a wave A of an ABC correction, and it seems to me like we're just consolidating in here the B wave, and B wave is generally terminating between 61 and 76.4 maximum retracement, and we've been doing it very, very nasty because normally we shouldn't get there that way. We should have done that like this, meaning an A, B, C structure instead of an A dynamic B and getting into C in here. So this is not normal. This is what I was forecasting the price to do, to just get there, take my profits, buying in again. This was the scenario I was trading. But basically the market just proven me wrong and I have to get out. So I'm waiting for that C wave to end up, even though that's the weirdest way it could have been done. We've done it that way with a tiny B point, making A, B, C in there. And now we're back into final wave, which is wave C. And we already made wave 1, 2. We're currently making wave 3. That is breaking down supports. And we'll have to make wave 4 to 5, and whenever we'll have done that, and I think near that area, which will have volume support, volume demand inside the 61.8 to 76.4% retracements, I think this is the area I want to buy into. But I need to wait for one more retracement and bearish impulse. So from what I can forecast right now, I still see the price to see this and this. So this is what I want to see, heading towards 61% retracement, finding some support in there because we do have strong support there. Just going to use the volume profile as usual. Okay, so you take the fixed range, you go there, you take it all the way up there, you figure out where we left some support. So this is the prices. We might find some support on two. First price is the one we're currently trading. Second price is a little bit lower, is right here. Okay, so this one we've been testing it, even though it was a double bullish support, we fucking broke it down. So right now we might get finding some support in there, having some kind of pullback, kind of a wave 4 support, wave 4 pullback. We get into wave 5 territory, in which we should probably get to trade that area, in which once again I think we'll have pretty fucking decent buy entries. I remain bullish in there, just to set things straight. I have no plans to reverse bearish, but I do have plans. Sorry, I'm just gonna go there and zoom a bit. So this is what we have. Okay, I'm getting in there from the bottom. Okay, so we got support in there. We've already tested back here. No, it wasn't. Okay, so we've got this one as well. I'm gonna note down those levels. We've got level 1 in here. I'm gonna try heading a little bit deeper in there. It's gonna be, yes, it's there. All right, so we got two very tiny and close prices in there. I'm gonna write down those two just for the purposes of precision. So this is all we have right now. These two have been tested and totally blast out. So right here, probably support for wave 4, and these are the prices I want to buy as a wave 5 territory with a stop loss below that exit low, and normally we should get fine to find the B2C wave, which is going to be generally 127% of wave A, which means we're going to get there, This is the maximum retracement area I was forecasting, and I think we're heading down there. So it is not going to be the 127 to 160 weight. It's generally, yes, it's this, which means those resistances will be the targets for the wave C, not even those ones. So those ones will be, for example, taking profit number 1, but we'll probably get to target those ones, and I think for some reasons this is where we're heading. So probably buying in there will be the best choice to make, but I will have to re-buy in there after taking a damn loss in here. That's part of the game, but that's how it is. You don't hold on to losing scenarios because you don't know how we're going to go, for example, and forever. Remember that this is fucking chaos theory out there, and if for some reasons I'm just wrong with the ongoing scenario I have right now, at least the expected scenario I just made in front of you here, the fact is, if this is just wrong, and if the market is collapsing to lower levels, how the hell do you think I can handle such loss? I'm already losing 4% in here. So if I didn't trigger that loss, I would be like a 10% loss in here. It is not something I can afford. I'm not losing 10% on a single scenario. If you got my point, I use statistical advantage, which means losing 10% of my damn capital on a single shot is nothing close to something I can take advantage of statistics. It means that if I lose 10 times in a row, I don't have money anymore. It's not something I can take. I mean, 10 times in a row is something that can happen. 20 to 30 times in a row is something that nearly never happens. And this is what I care about. This is why I don't lose more than 3 to 4%. I mean, generally it's 2.5, which leaves the market with 40 times losing in a row to get me out, which is never going to happen. It can, obviously, everything's possible, but losing 40 damn times in a row means I'm the worst trader ever, and this is not going to happen. Right? I hope you get to the point. This is the only reason why I'm not risking more than that on a single scenario. It's just to get the more odds, to the longest possible losing streak to get me out. And as currently it is approximately 30 to 40 losses in a row to get me out without a single gain, because one gain is erasing generally 4 to 5 losses, which means if I'm just gaining one time, the market just have to take me 5 additional losses in a row to keep on pushing me to the exit door, and it's never going to happen. I can't say never, but probably and statistically this is not probable. Anyway, moving on. So the gold might be the next one to fuck me up. Obviously this one I will have to take a maximum stop loss in there as well. If for some reasons we were to go there, I'll have to trigger maximum losses. I will be fucking damn ashamed to do that because I know the market doesn't have that much gas to keep on going forever, and we're nearly reaching the C point in there. That means that we will have to rebound in the gold, just don't know when, and I'll be damn ashamed to be pushed out right at the top. The problem is still the same thing, is the damn fuck dollar. It's pushing up, but we're now working the resistances, and I expect that damn market to collapse right after, and I will probably have been stopped out right at the market top or near the market top on GBP USD. Probably about to be the same if gold is breaking down through support, but I have to take those losses. I hope you understand why. I hope I've been clear enough about the reasons. It's just because I don't want to let myself go further than that, but just because of chaos theory. No matter how fucking strong the convictions I have are, I really know, no, I don't know, but I'm pretty sure I'm going to be stopped out right at the market bottom on those two, but that's how it is. I rather like to take the loss and re-enter later on when the trade will be confirmed. So moving on, the junk bonds are sold again right below the resistances. We're pullbacking, which means they're trying to get there, but we made a bearish engulfing again. So same stop-it fail below the resistances, right at the market top, right at the channel stop in here, which means if junk bonds are sold, I damn hope to have Wall Street's falling apart. This has been triggering somehow today, but still very low. I mean, it's like Wall Street's never ever fucking gonna go down, even though all the signals are there to just flock them and make that all falling apart. But right now, it's like the market doesn't even care. The dollar should go down. It isn't. The SPX and NASDAQ should go down, but they aren't. The FTSE should be just fucking collapsing, and it isn't. The Eurozone should be collapsing, and they are collapsing. It's like we're the only one trading normally back then. And that's weird, because I mean, FTSE should be a lot, like 5 to 10% lower than the current prices. So it may suggest that if things get the way I think they should do, we should have a fucking drop down in US equities, because US equities should be 15% lower, not to say even more. And the FTSE should be 10% lower. So the FTSE might be losing a lot in here if things get dirty. GPN still showing some very dangerous signs today as well. Might be just a consolidation, so don't take it for granted right now. But we're still working around on that scenario. I'm still bearish on this one, as long as we don't get to go there and to invalidate my scenario. The VIX is pulling up back to the 12s. We'll see about that. If this was just a fucking trap for bears on volatility, I mean, those who've been selling with billions in there might be just suffering some stress today, because the VIX at 12, when you sold those levels, means that if we ever had to go to 15, you're just wrecked and you're out of the game. And as I said, 15 is the average long-term mid volatility levels. And you can clearly see that the market has been trading that level accordingly. And I strongly think that this was just a damn fucking trap, and that if we were about to set volatility above or nearly above, say nearly 15 and above, then we might fuck up some damn volatility seller once and for all. Just take them out of the game so they will never ever have to do it again. They already been fucked up by Goldman. I mean, Goldman back then just bought those guys out, and they have to suffer quite some losses. And it's like they've been trying once again. Don't know why, but they've been trying to sell again. So if Goldman's back at play to just fuck them up once again, might not be pretty what's about to come. So we'll see about that. But at some point, those who've been selling volatility have been playing a very dangerous game. We'll see if they were right or wrong. The thing is that the Nasdaq is showing some signs of just, this could just be a pullback. If you have a look at the 15-minute charts, I mean, this is literally nothing. And if for some reasons it was just about to buy, then we'll just be another damn pullback. But if this is the first step of a falling market, just look at how we went up. I mean, you can really pretty much expect something like that to occur in a bearish side if we were about to reverse. So we could very well terminate the week like right here, and this wouldn't be pretty if that's what's about to come. So we'll see about that. Today is going to be an interesting day. We've got a CPI course this afternoon. The morning for those who are watching into a New York time frame. So you see about that. This is the only catalyst today. We'll see how the market reacts. Remember that the first time we've been dropping earlier this year, it was because of inflation. If inflation's level were to surprise Wall Street for some reasons, it might be dangerous. So you might want to think about it twice, because Wall Street's been basically playing its own game for weeks, not to say for damn month. It's been 4 to 5 months that Wall Street's been playing against each and everyone else in the world. They've been isolating themselves, thinking that they will forever be the winners of that dangerous game. I think at some point you're going to see that you are not, and that you might even lose more than what you think, what you were thinking in the first place, which means the market will have to be wrong-footed. And if that's what's about to come, then wrong footing pattern on a very overbought market means that you're generally falling in a straight line, which means we could have some damn volatility back at play. So I could be wrong, I could be right, I don't really give a shit. All I know is that right now, as long as we remain below the market top of the Nasdaq, means that to me are just still for the market to probably have some risk on trades, some risk-off trades, which is money flowing off the market to go into safer areas like the gold, off the dollar. Just to set things straight, I think the dollar has been peaking right now, and we're just working on resistance. And just as you can see, we're already showing signs of weaknesses. We try to break up, failed it twice in a row, and I'm pretty much confident I might eventually even take a short entry on the dollar. So this is something that we'll have to talk about next week. Not going to take a dollar short entry over week, especially not ahead of Wall Street's session. So probably I'm going to have to be in a watch and see, wait and see approach of this afternoon and this US session, and maybe eventually setting some things up earlier next week to trigger some potential bearish reversal on the dollar. So might be eventually saving my ass on the gold. Maybe I have to enter again on GBP USD, and we'll see about that. If, for example, Wall Street was about to collapse, I think the gold might be the game changer in there. So we'll see about that. It's going to be an interesting session at Wall Street, but nothing I want to trade ahead of that weekend. So bye guys, wish you a good weekend. We'll see each other on Monday. And first and lastly, we're going to take the questions. So market forecasts. So yes, we're gonna make a show about Elon Musk, and I'm gonna probably record this one this afternoon, so you have it pretty soon. You didn't lose your cool, you just mean you were caught off guard and moved on. Yes, that's how it is. I mean, when you're wrong, this is how you're gonna make the difference between a trader and a damn fucking dream catcher and dream sellers. Is the fact that a dream catcher is never gonna admit when it's wrong, when a hero is wrong. I mean, at some point I'm wrong, and I don't really care about hiding it. Trump will probably be impeached during this term. Yes, I also think it will be, but that's still something I have to see. And as I said, I know it's not pretty and might be a little bit cold-blooded out there, but I think Trump is either going to be killed or impeached. But it's not. I see very low chances for him to terminate the term, either alive or not impeached. So we'll see about that. I mean, yes, some people think that's the opposite, and that's a leftist dream, and he will be re-elected. Okay. I mean, let's take a bet, but I don't really do that kind of thing. I give you my impressions and my feelings, and then you do whatever you want with them. I'm not here to make you change your mind. So, for example, Dennis, if you're a Trump supporter, then just be. I mean, I can't be mad at you. You have free will, so I'll let you think the way you want, even though you and I might be not really agreeing about lots of things. But I don't think this is just fucking fake news. I think, fuck it. I mean, just be smart, Dennis. Do you really think the Russian collusion is fake news? Because what? Because the media has been telling you they were. Because Trump has been telling you this was fake news. I mean, God freaking damn it, we've got convictions out there, and not just convictions. It's like we've got proof, we've got recordings, and damn it, do you really think the guy weren't aware of some things that was happening inside his damn tower, like a few floors below, with his own zone, and he wasn't aware of this? I mean, fuck me, can you be that stupid? Anyway. So what exactly? Sorry, yes, someone has been answering for me, and we're basically it. I think those were previous. No, okay. So thanks for this analysis. You're my favorite trader. Was actually following your first BTC crash pattern, waiting from the sideline. I was kind of confused with your recent move, but I thought that we'll see. Yes, actually, it happens for some reasons. I just got myself wrong-footed. I knew that was the next move to play either way. I mean, when I decided to buy the Ethereums and other tiny altcoins, the thing is that I haven't changed my mind on the big picture scenario, which was waiting to get that bearish reversal to get into the flushing pattern. That was the plan anyway. It was just buying short term to sell again, and I always was clear about that. I already had the mindset about selling again. It's just that for some reasons I decided to put that scenario on a tiny short-term hold to get into selling again, but slightly later. I said I would be ready to sell at the end of August, heading into September, and that's what caught me wrong. and that's how it is. I mean, I'm not mad at losing that opportunity to make extra money. I'm actually losing the money I've been making on that Bitcoin rebounds. When the scenario, the little pump on Bitcoin got me some money, and I just lost that money out of Ethereum misleading scenario. But I cannot be right in 100% time. And as I said, the more we'll move forward in the crashing pattern, the more tricks and traps there will be. And obviously I just got caught at the last final damn stage. But as this is the final bearish stage, and as I see the risk increasing, this is the only reason why I don't want to change my mind and get into selling right now, because I might just get to sell right now and be wrong-footed right after. So I'd rather like right now to switch into what I thought was the most reasonable at that point, which is just stop speculation and just waiting for the long-term trade to show up and narrow the risks of buy and hold scenario, and just do that damn buy and hold, and then just let go for a few months, not really taking care of the Bitcoin. And as I said, and I really insist on this, I want you guys to get the hell out of Bitcoins, which means whenever you have made that damn buy and hold, I want you guys, if the goal in here is to get to trading, to get yourself into switching to trader as a job, or wanted to get a better trader than you might actually be at that point, you'll have to get out of just trading cryptocurrencies. Trading is nothing close to that. Trading is trading multiple assets, getting into creating yourself of a statistical advantage and all the shit you might know about right now at that point. So really take that as an opportunity. Whenever you have dealt with the Bitcoin's long-term trade, get yourself ahead of trading something else. Get to forex, even though that might be scaring you a lot because you don't know anything about that market. It remains a damn market in which you can take statistical advantage of. So do it. Move yourself, get your fingers out of your ass, and just go to work and learn to go where you fear to trade. Okay? Do it slowly, do it with low leverage, but get the hell out of cryptocurrencies only. So anyway, moving on. Yeah, the volume alert chip. This is really something that you should focus yourself into. Emerging market, my thoughts are that will take over the US dollar and just fuck up the US economy. Is at some point they're suffering, but you know the thing, the market, just like life, is something cyclical, which means we've been into the dollar profiting cyclical cycle in which the dollar's been profiting for the US economy and making suffer the emerging markets who have their debts in dollars. I mean, it's like they're having their head underwater at the current time. They're just like sinking, and it's like Wall Street's just watching them die without ever thinking that if they die, the US die as well, because you have so many dollars in debts on those countries that if they don't pay, and if they get there, stand up out of water and say, fuck you, we're not going to pay the debt anymore, then the dollar will just fucking collapse. So the way you think it is that you're going to take advantage of everything forever, and that you are the strongest, and for some reasons nothing going to be touching or heading to you, nothing's going to happen, nothing bad is going to happen to the US. How the hell can you be that stupid? It's not going to happen. That's not how life works, and that's not how the market works. You've been benefiting from now. At some point, it's going to reverse, and you got to pay for what you've done. And believe me, it might be pretty soon. So, as you've been putting too much pressure on the entire world to just hold on to your fucking market tops in the US, you can get those at short term. Get into trading. Might be lasting another couple months. But at some point, you're going to have to pay the prices for all the shit you've been putting out there. I mean, creating some nasty distortions, putting the dollar into speculative, dangerous bearish areas. And at some point, I just think the dollar has been messing around for too long, and that whenever the money will just get to wrong foot the bulls at Wall Street, I mean, the guys at Wall Street is not bullish. just to set things really straight. And we've been talking about that. Wall Street is already selling, actually. The volume is negative. Wall Street's pulling out of US market. Who the hell is buying is the corporate themselves, who are buying them shares because they think they have infinite amount of money. They don't know what to do about it, so they're just buying their fucking shares. It really is that stupid. And who else is buying? The retail traders. Do you really think this is what we'll have in a trendy market? No, this is what we have on a fucking top market, and this is not going to be pretty afterwards. And as I said, you've been putting damn many distortions in place to get there, which means whenever those distortions will reverse, you're going to have to pay double the amount, and this is not going to be pretty. As I said, I think all the markets are already putting the market tops, if not already. And I think that for some reasons, the US will have the strongest ever market downturn that I ever thought we'll have, because you're thinking this is going to last forever. And I think you're going to have a very, very weird wake up at some morning. I just don't know when. I just don't know how it will trigger. All I know is that at some point, investors are going to wake up in the morning and see the market just collapsing with market interruptions and things like that, and no one will ever see that coming. But we're very far ahead into dangerous areas in the market, dangerous distortions, dangerous price patterns. Everything suggests the red is already at play. All we don't see right now is the price confirming it. And whenever the price will confirm, everyone will reverse to bearish, which means we'll have no buyers anymore in the market with just sellers. And you know how it goes. It's not pretty. So anyway, moving on, as I said, I'm just going to terminate that show by saying, and once again, I'm not doing this to fucking scare you out, okay? Just be aware of the damn risks. If you have all your damn money into stocks, it's about time to take it off the table. At least take 50% off. Just let some money in there. It's not going to be the end of the world. It's just that if you want to buy stocks, wait for the reduction, for the price reductions. Wait for the damn Black Friday and just don't buy a week right before. Okay, that would be the most stupid choice you could make. Okay, so wait and be damn patient. Take 50% off the table to buy at lower prices later on and ride another uptrend. Yes, the stock market will be uptrendy forever, but it's a matter of price. What is the damn price you want to pay? Do you want to buy the market top or do you want to buy the market bottom? To me, the answer is clearly the second one. So buying right now, totally out of context unless you're doing it very short term, and the danger is rising each and every day with all those distortions, which suggests to me that right now buying is no longer an option. Or you're taking heavy amounts of risks and you'll have to pay the consequences if some days something goes wrong. And as I said, if you're thinking that you'll be able to get out at no cost without problem because the liquidity, whatever shit this is, if you put yourself into Apple, there's always going to be someone to buy Apple, then all I'm going to say is we'll see who was right. And I bet I will. So anyway, bye guys, and trade safe.